Good morning everyone. How's it going? From my side, I would just like to say it's been a rough week in the market. Um, we haven't really seen any of our setups being respected, and I believe that is to do with the dollar. If you remember yesterday, I spoke about gold. I said that if gold breaks above this key structure, I will look for some sort of retest or bullish confluence at the structure. And what had happened was I had got an inverse head and shoulder pattern. I got a break above the neckline in which I entered a long position around the zone. Unfortunately, I was stopped out of this trade and took a full 1% loss on this trade. Just to review what happened, so price failed to break upwards and started ranging sideways, and when price ranged sideways, I was not out by this time and we had broke above. So when we had broke above, I was anticipating that we would get a further push to the upside. That did not happen due to price breaking back into the range, and then we were stopped out. Now price looks like it's forming some sort of bullish descending channel. Look, the upwards movement still might happen, very possible. It just might not happen on our time. It might happen even next week, and I believe that is to do more with the dollar, due to the dollar being very indecisive. If you look at what's currently happening from previous week analysis, we had the inverse head and shoulder at key structure, indicating that there was bullish momentum incoming. We did get the push to the upside. We failed to break the zone, and then we retested the neckline. And when we retested the neckline, I started to note that price could possibly be starting to have bearish momentum, as we created a head and shoulder pattern. And that head and shoulder pattern was made something like that, and then we even started having a ascending bearish channel, and then price broke to the downside, even gave us a retest of the level, and it looked like it was continuing to the downside. Unfortunately, it did not continue to the downside, and it ended up forming some sort of another sort of bearish descending channel, which further indicated possible bearish confluence, and it just shot to the upside. And when we looked again, we saw that it was forming a bullish descending channel. So my outlook for the dollar right now is that it could be possibly ranging, and my bearish bias was still valid on that range because we had a bounce at key structure, we had a failed break at this structure, and the most reasonable answer was to continue to retest the structure that it initially bounced off. We did not have the break. I believe that this downwards movement will only be confirmed once we break this inverse right shoulder and price gives us sort of a retest of the zone, and then possible confirmed movement to the downside. The other reason for this outlook not being bullish was that this impulse was not so strong, and it was made clear due to that price could not break this level. If this impulse was strong, it was going to break the zone and then give us a sort of retest of the structure to validate the dollar gaining strength. Unfortunately, it failed to do that, and this is why we started looking for long positions on Euro USD and gold. Euro USD, we ended up taking a less than 0.25% loss just to break down this trade. So price at key structure, we had a bounce previously at this very same zone. Price then bounced again, and it even bounced the third time, and as we bounced off here, we could have got a lower time frame correction. I did do a buy stop entry. As price started moving in my favor here, what I did is I didn't want to rush to cover entry. I want to give it trade space to breed, because initially my stop loss was around here at 1%, and as it started moving in my favor, I then moved it just below structure, and I was taken out for less than 0.25. And fortunately for me, it was good in doing so, because if we look at the dollar now, it looks like that dollar is kind of uncertain at the moment. So if dollar had shot down and continued like our plan, you saw here we even were sort of developing some momentum to push to the upside. So USD pairs, I would stay away from them up until the dollar bias is confirmed. So gold, as you can see, gold, I said, we're taken out, and you can see that the price is now developing into a bullish descending channel. So very possible that buy could still happen, buy setups could still happen. I would be more interested if those setups started occurring at this level and we break back into the channel, retest, and then take the bottom all the way to the top. And if that plays out, you can see that we could form a potential inverse head and shoulder, which will be a really strong bullish confluence, because currently we don't have any real direction because of the dollar. Okay, GBP JPY, just to touch on this. So initially my bias was to the upside, because originally we were in an uptrend and price broke out. I was looking at this as a potential liquidity sweep back into the channel, retest the structure, and that would have been my confluence to enter a long position. That did not happen. What ended up happening was that price more formed like a bearish ascending channel, if you can see, and it's kind of at the structure again. I think it's just retesting the zone. So more possible that shorts can happen instead of longs. It's a bit far away from the entry. What I would prefer to take at this level is that if price breaks out of the zone, gives a retest of the structure, and then continues to retest this potential neckline. As you can see, if you look at this far back, it looks more like a head and shoulder pattern. I will be more interested in taking shorts around this 191585 zone all the way to the 190153 zone, as I feel that longs are kind of invalidated now due to the structure developing in such a way. UJ, same story. So UJ, same story. Initially I had proposed that if price liquidity sweep shot back up into the channel, retested the structure that had previously broke out, and then continued to upside. That did not happen. As we can see, same story with GJ. Price seems to be climbing up, but it's climbing up in more of a bearish ascending channel, and potentially to retest this key structure zone that was broken. So one thing to watch for UJ and GBP JPY, if we get a retest of structure there and price respects it, and we get a break outside of the channel, and then price thus respects the zone again, we can then enter shorts up to the 142 level, and if that is confirmed, we will then complete a head and shoulder pattern as outlined. So two possible trades that might happen today is UJ and GJ. I would recommend staying away from USD pairs up until the dollar movement is confirmed, and that movement will only be confirmed on two things. It will be confirmed on a break of the zone and a retest of the zone, or it will be confirmed on break to the downside and a retest of this previous inverse right shoulder. So for now, let's just wait and see what the dollar does, but GJ and UJ are potential short setups.